Now that we've spent some time talking about the various kinds of banks and how they make money, let's now turn our attention to the different kinds of careers in banking. A career in banking can be very rewarding. Many people that join a bank will remain throughout their entire career. That's largely because there are so many different roles and opportunities that a bank has. Let's spend some time looking at some of the different careers you can pursue. On this career map of the various roles within finance, our focus is specifically on the top half. As you can see, there are a wide range of roles that fall under this area. In investment banking, that includes buy-side and sell-side sales and trading, research, and corporate advisory functions. Commercial and corporate banking will include credit functions, corporate advisory services, and relationship management. And in retail banking, that will include credit functions, financial planning, and relationship management. Also, there are different subcategories and functions within these different areas. For example, investment bankers could work in bulge bracket banking or in a boutique firm. In commercial banking, commercial bankers could be working with their clients with traditional loan products, which could get very complex. They could also be helping them with trade finance and foreign exchange for their clients that are importers and exporters. And over on the retail banking side, if we drill into, say, private banking, that's a specialized type of retail bank where bankers are tasked with handling the specific financial needs of high net worth individuals. The investment banking division, or the IBD, of an investment bank helps governments, corporations, and institutions raise capital and complete mergers and acquisitions. An investment banking career is extremely demanding, with analysts frequently working over 100 hours per week. The competition for positions is intense. Compensation is very high, and the work can be very high profile. The trade-off, however, are long hours, a military-like culture, and a lot of low-level tasks, at least at the beginning. There are two main entry points into investment banking: analyst and associate. Both roles require extensive financial modeling and presentation building skills. Common examples of the types of financial models include three-statement models, DCF models, M&A models, LBO models, and more. Analysts or associates typically go on to work in private equity, equity research, in-house at a corporation, or some of them do something entirely different. Most investment bankers dream of graduating to private equity, and the banks are natural feeder systems for these firms. Corporate development is a pleasant stepping stone from investment banking and provides exposure to similar transactions on the client side. Check out CFI's Financial Modeling and Valuation Analyst program to learn more about financial modeling, and you may also want to check out our Capital Markets and Securities Analyst program to learn about more areas in investment banking. The sales and trading division of an investment bank helps mutual funds, hedge funds, pension funds, and other institutional funds facilitate equities transactions, both buying and selling. A career in sales and trading can be extremely strenuous with a very fast-paced environment. The competition for positions is intense, compensation can be very high, and the work can be extremely stressful. The typical entry point on a sales and trading desk is at the associate level. Candidates can then move on to director or vice president, executive director, managing director, and head positions. The Equity Research Division for both buy and sell side provides research coverage of public companies and distributes that research to the bank's clients. A career in equity research is very demanding, with associates and analysts frequently working 70-plus hour weeks. Organizational chart in equity research is much flatter than most other divisions, with seniority being a function of the quality of research. The two main positions are equity research analyst and equity research associate. An associate typically spends 3 to 4 years in that position until they become an associate analyst and finally an analyst. Associates and analysts often stay in equity research for a long time, given the more reasonable work-life balance compared to other areas of investment banking. It's common for an analyst to move from the sell side to the buy side, where they perform similar research to be used by the firm's portfolio managers. Another common move is to go in-house on the corporate side and work in corporate development on M&A transactions or work in financial planning and analysis. A commercial banking career path has you providing clients with credit products such as term loans, revolving lines of credit, syndicated facilities, cash management services, and other products. As a credit analyst or account manager, you deliver financial advice and solutions that are tailored to your clients' needs, such as growing their business, helping them to buy new equipment, funding their working capital, and other day-to-day business banking needs. A credit analyst is tasked with analyzing a client's financial statements, its competitive position, industry, and its management team. The credit analyst will prepare a credit application that puts together the structure and pricing of a financing request, based on all of the analysis that they have conducted. An account manager is focused on business development and is a more client-facing role. The account manager's job is to find new clients for the bank and maintain existing relationships. The account manager works closely with colleagues on the credit side to deliver the full result to the client. Within commercial banking, credit analysts can move on to more senior roles, such as credit adjudicators. Others may leave commercial banking and they may move over to something like a ratings agency where they provide credit analysis there. CFI's Certified Banking and Credit Analyst program focuses on topics one should know to become a credit analyst, starting from understanding the fundamentals of credit all the way through to completing a credit application. A retail banking career path has you providing clients with deposit and payment products, with credit products such as term loans, revolving lines of credit, and credit cards, and other personal financial products. Customer advisors, account managers, and credit analysts do play a role in the sector, delivering financial advice and solutions that are tailored to the client's needs, such as day-to-day banking, and planning for their future needs, such as education or retirement. Customer advisors and account managers are more common roles in the retail banking sector. Credit analysts have a lesser role to play in this sector, primarily because a lot of credit adjudication decisions have become automated. However, certainly having these skills is very beneficial, especially if you are going to move into the area of private banking where you're working with high net worth individuals. There are a number of other roles in banking that may be of interest to finance grads. Front office roles are the ones we've already covered. They're typically client-facing, or their work is directly related to a client. Middle office, or mid-office roles, support the work of front office. These roles include risk management, corporate treasury, internal audit, and strategic management. Data analytics is another integral part of the mid-office and is starting to grow in importance. The roles in mid-office mirror the roles that can be found in the other quadrants of the career map. Similar to mid-office roles, back-office roles can also be found in other quadrants of the career map. They include those roles that support the overall operations of the bank. Roles such as financial planning and analysis, regulatory compliance, settlements, and information technology services. So if you have an interest in any of these roles, banking can be a very good industry to work in, especially as there are so many different opportunities for movement throughout the organization and the sector itself. That concludes this session on Introduction to Banking. In this session, we looked at the different bank categories and the different types and structures of financial institutions. We also broadly discussed the different types of banking products and services each type of bank offers, and who the customers are that would use those products and services. We then talked about how it is a bank makes money and how it measures its performance. We finished by looking at the various career paths a career in banking can offer. We hope you enjoyed this course, and we look forward to having you join us again. Bye for now.